Hello, good weekend to all. It's Adil bringing you a review of the European markets for the trading session, the 19th of April 2021. Be sure to visit me on Twitter, where I'm very active, and also you can visit me on my site as well. For those that want to obviously gain insight into my trading style and methodology, I do have the live analysis service that you can certainly join. Be sure to go onto my website or email me as well. My details are on my website, and I can certainly add you on to the live trading service. All new members get a 1 month free obviously insight to see obviously if it fits their certainly helps their trading day-to-day trading activity. And those that certainly want to learn the obviously technical analysis that was originally invented by Mr. Murphy, although there are certain individuals that have certainly contributed to that after that as well. But he really was the founding father potentially. So again, if you do want to learn and obviously gain an insight into the concept of intermarket analysis for day trading or even swing trading, you can certainly contact me regarding the live mentoring, or should I say live as well, but certainly the mentoring program which I run over a 4-week period via one-to-one until via Skype. Okay, so in terms of the analysis, in terms of the markets, basically the summation really is stronger Chinese data certainly helped the markets. Obviously commodities certainly pushed higher with regards to that, and obviously the dovish Fed, or the attempt at the dovish Fed, and obviously the dovish ECB as well, certainly have sent obviously equities screaming higher. The FTSE 100 certainly broke through the 7,000 barrier, with the FTSE 250 obviously breaking higher as well. Very, very impressive, led by the vaccine euphoria and the excitement surrounding that as well, as you can see here, FTSE 352 as well. Very, very impressive to say the least. Obviously commodities helping and stronger Chinese data helping as well to a large extent. Miners obviously being helped by China, obviously commodities ripping higher on the back of stronger Chinese GDP, stronger US data as well. Okay, so that's basically the actual backdrop in terms of equity. So let's quickly look into the technical picture here. So the weekly chart of the FTSE 100. Now, next resistance you are looking at is around the 7080. Okay, we've certainly pushed higher through that key psychological 7,000 barrier. On the weekly chart, it was 6880. Obviously, we pushed through that. Now we're at that previous support equals resistance around the 7090, 7080. That's the next key resistance. There's a lot of traction here. Okay, in terms of the FTSE. Obviously, if the market continues high on the back of vaccine euphoria and stronger Chinese data, etc., then obviously we are looking to push higher back up to that 7,700 zone. But that certainly is a longer way away, and there's a lot of work to do before we get to that potential area as well. Now, one of the things that actually is confusing me right now is the obviously total negation of any bearish data from Europe, especially given the fact that Europe certainly is the laggard now to a large extent, and also US cases have started to spike as well. India currently is out of control. They have, I think, declared a state of emergency, and in India hospitals are low on oxygen. India is going through an appalling COVID wave, 200,000 plus infections a day. People using social media to try and get medical assistance. I mean, that's not exactly what you want to be hearing. 217,000 infections on Friday, and scientists say the Indian coronavirus, apparently there's a variant now as well, has the potential to scupper lockdown easing as well. So again, the fact that Mr. Johnson hasn't put India on the red list is really a cause for concern. A lot of that obviously is stimulated by the fact that they want to obviously sign a trade deal, and obviously India is the prime location for vaccinations in terms of its creation. So again, cheap labour, etc. So given the fact that they want access to those vaccines, they don't want to upset India in any way, but that certainly needs to be addressed. I mean, our nation is at war. 1,400 Indians died due to the pandemic yesterday, 1,182 the day before, more than 2.5 times total killed in action in the wars, etc. So this certainly isn't looking good. We do have Mr. Modi, who really is incompetent to a large extent in terms of controlling that as well, so that certainly is a cause for concern. So that certainly could boomerang, and if we do get any potential mutations coming through, given the fact that India is not on the red list, that will be a cause for concern. Also, in terms of vaccine supplies, potential reduction there as well. And there was a concern with regards to J&J and obviously Pfizer as well. Also AstraZeneca in terms of blood clots, but that's certainly, the market certainly has shrugged that off as well. So daily chart at the moment, the FTSE 100, the key resistance is seen around the 7040 and 7020, where previous support equals resistance. So again, I'm going to watch out for that key level. If you break above, then the next potential resistance is seen around the 7150. Okay, in terms of resistance here, then we have resistance at this zone around the 7250, and then resistance is seen at 7530. So like I said, a lot of work is to be done before we obviously push higher. We've had a 3-bar move higher, which is quite impressive. We broke through the key resistance at 6880. So FTSE certainly has been very, very bullish, to say the least. Okay, and that certainly is helped by the obviously COVID restrictions easing, and the obviously vaccinations certainly kicking in as well. Okay, so in terms of obviously potential support, if we do potentially move lower, then previous resistance equals support at 6940, then you've got support at 6850, and you've got support around at 6814 and potentially 6790 as well. So quite an impressive thrust, to say the least, in terms of the FTSE on the 60-minute chart. 10-minute chart, we did see some easing around the 7035 zone. We went back down to 7020, pivot low at 7006, support is seen at 7000, and gap fill is seen at 6980, and then a further gap below is seen at 6940. So they are the key levels on the downside. In terms of the European markets, very, very impressive. I mean, the German DAX consolidate, then continue to rip higher on stronger volume. So certainly continues to baffle me in terms of the German DAX, given the fact that they are obviously in a dire state in terms of the pandemic there. Certainly a lack of control, or total out of control to a large extent. Obviously Miss Merkel is talking about extending the lockdown, etc., etc. One would presume that would be risk negative, but given the fact that the ECB certainly is coming in, stepping in, and it seems that the market is only interested in the actual obviously ECB QE or PEP, call it what you want, basically the Kool-Aid. Okay, Chinese data certainly was stronger, so again that certainly did help the German DAX to a large extent, but this move here, impressive. Very, very, very impressive. I mean, from 8,500 now, we're almost doubled on the back in a pandemic. Just try and fathom that. In a pandemic, the German DAX has doubled in a pandemic. Unbelievable. And they are currently still in lockdown, and the infection numbers are certainly out of control in Europe, and their vaccine certainly hasn't been anything near a success. So if you explain that to any economist and explain to him that the index doubled in that time period, they'll be baffled. And I'm baffled as well. Okay, and really the only explanation obviously is the fact that we have the ECB running their printing machine, and they certainly seem to be buying this to oblivion. Okay, I mean, there's no pullback here at all. I mean, you've had a bull. I mean, a move from almost 14,000 to 15,500, and literally no pullback. Literally no pullback. I mean, gap higher, gap higher, gap higher, gap higher. I mean, we could just continue playing this gap higher game, and really it's become untradeable, really, the German DAX, from my perspective. This is one of the reasons why I don't touch it anyway, but certainly is very, very baffling, to say the least. Okay, in terms of the French CAC as well, this is another one. Again, France certainly is in a dire strait in terms of the pandemic. Certainly is probably the worst in Europe, or one of the worst in Europe, and yet this continues to rip higher. So baffles me. The weekly chart has taken out the key resistance around the 6160 zone, even with a stronger euro pushing higher as well. That certainly hasn't obviously derailed the French CAC. So very, very impressive. Although I am looking at the bigger index here with the CAC mid and small. The weekly chart is showing resistance here, so again I'm going to rely on that resistance for now to keep the French CAC at bay. Now again, Euro stocks very, very impressive, ripped through, and obviously has been short squeezing ever since in terms of the daily chart, weekly chart as well. I mean, we certainly are in potential short squeeze territory. Really, if you look at it, you have got resistance here at 4030, and the next resistance is seen around the 4140 zone. So watch out for those levels, but nevertheless very, very impressive in terms of the European equities. Stock 600, again daily chart certainly showing super bullish, and obviously a break above that, and we really are in no man's land at the moment from what I can see on the Stock 600, and it really is all about the ECB's PEP program. And it looks like they've again, this is another index that's doubled, and it looks like this wants to go to the moon. Okay, so you've got unlimited money being printed, and that money obviously is finding its way to equities, given the fact that they're a hedge against inflation. Probably the only place to be safe to be right now, and obviously European equities just ripping higher. So I did expect a potential reversal on the back of obviously concerns regarding the COVID and the pandemic, but yet that certainly isn't the case, folks. This market just continues to rip higher, obviously to everybody's surprise. Let's put it that way. Now, we have had Bitcoin sell off over the weekend. It'll be interesting to see how the impact of that. The 60-minute chart, we had a pivot high of 65,000. We're now currently at 53,000. This is another bubble. So it's totally out of control, and it's all led by the obviously money printing. Basically, all that stimulus money, all that printing, obviously QE, etc. It's basically finding itself going into Bitcoin. There's nowhere else to park it, and this obviously speculative frenzy continues. If you stop the stimulus, if you stop the QE, watch how this collapses. Okay, literally, it's just a speculative arena. Basically, it's an arena for them to park their money, and really is probably the ultimate hedge against inflation, given its obviously rise from the pivot low around the 4,000 level. Very, very impressive, to say the least. But everybody wants to believe in it, and let them continue. God forbid if we had obviously a solar solar attack, or even a potential cyber attack. One solar flare could certainly wipe this out, but that's an argument for another day. For now, let's just keep it focused on equities, and the German DAX certainly is super bullish. Really, there's no stopping this index. Do you buy this index at this froth? I mean, do you continue to buy the froth and expect higher prices, or do you just sit back and wait for the dip, which never actually comes? It really is a tough market, let's put it that way. It certainly isn't making sense to me from a fundamental perspective, and even from an intermarket analysis perspective as well. It really is baffling. Central banks certainly seem to have lost total control, and traders certainly are only obviously looking at one direction, and that obviously indicates a potential crash is on the horizon. That's basically all I can say. Given the fact that obviously Bitcoin is down 15% over the weekend, I won't be surprised to see another drop as well in the equity market. But then again, central banks are in full swing. Fiscal policy or fiscal stimulus is in full swing. Let's see what happens. Okay, really are uncharted territory, unprecedented times, and it's really it's an area or a period, should I say, of observation, study, and education to see how the market responds. Given the fact that we're on uncharted territory, unprecedented times. I mean, I don't think we've ever had a time where we've got a concerted effort of fiscal and monetary stimulus acting side by side by multiple governments all around the world, and really that's creating the super inflationary cycle. And it looks like equities, according to the hedge funds, is the only place to be parked right now as the ultimate hedge. Even gold isn't the case. Also, oil prices obviously are to a large extent as well. I mean, they are factoring in the potential move, but there's a H&S formation on that oil price, and that certainly doesn't bode well going forward. Okay, folks, so on that note, please be sure to obviously check me out on Twitter, and you can certainly visit my site for those that want to join the live trading service. Goodbye now.